And thank you very much for joining me. This is the morning market review. It's Thursday, the 23rd of November. My name is Russell Shaw. I'm a senior market specialist at FXCM, and my email address is rshaw@fxcm.com. Just going to go ahead and bring up the disclaimers. Here's a high-risk investment warning. I'll keep this on screen for a few moments. Hey Raj, good morning to you. Nice to have you on the webinar. And our market commentaries disclaimer. And our references MarketScope and TradingView. We'll use MarketScope today. Right up front, we need to say that the liquidity today is going to be much lower, and that's because it's a Thanksgiving holiday in the US. And it probably extends through to tomorrow. A lot of traders take a long weekend here. So the stock markets are closed in the US and the bond markets are closed. So we're going to have a very, I think, thin trade on the market. So just be careful of that. And there's a holiday in Japan as well, a Labor Day holiday. So a very thin day in terms of liquidity. Hey James, good morning to you and welcome. So what we'll do is we'll just do standard trend analysis here. We'll look at some of the majors. We're looking at Euro here. We'll start off with the weekly chart. And you can see that the Euro has moved above its 30-week moving average. And importantly, the 30-week moving average has turned up. So there does seem to be support for the Euro-US dollar on a technical basis. And then if you take a look at the RSI, it's moved above 50. So above 50 is the positive area. And typically what happens is when the RSI stays above 50, there tends to be an upwards trend. It doesn't move in a straight line. It will ebb and flow. There'll be peaks and troughs, but you can see by and large the underlying momentums to the upside. And similarly, what we can infer from that is, well, as long as we stay above the 50 area, sure, we may have some ebbs and flows, but the idea here is, of course, that there's an underlying bullish momentum. And given the fact that we are above the 30-week moving average, we're using the direction of the 30-week moving average as a filter. It's turned up. Let's go down to the daily chart. And on the daily chart, you can see that we're in zone 1. And not only are we in zone 1, the RSI is above 50. Now, we're looking at Euro against the US dollar. Remember, US dollar is on, the US is on holiday today, so there's going to be thin trade here. So the thinner the trade, the less reliable the chart patterns. Chart patterns are much more reliable in a liquid market, and I think there's going to be a fair amount of illiquidity today. So just be aware of that. As I say, it may be worth perhaps, just taking time off until the liquidity comes back in, but just be aware of that. What we can try and assess here is, given the daily chart on the Euro, do we close above yesterday's high? And if we close above yesterday's high, we've got this reference candle in here. If you take a look at the hourly chart is showing some signs of positivity. Let me just clean this up. All right, let's just clean it up. Let's take that fib out. And all these ellipses and rectangles are in the past. And now what we want to do is we want to marry the hourly chart with the daily chart, which is by and large been synchronized with the weekly chart. And what you can see is the euro has a bid to it. Okay, so the green 5-hour exponential moving average is on top of that orange green hour exponential moving average. Importantly, there does seem to be a momentum behind it. As long as we stay above 80 or in the sort of upper quintile region, again, I would suggest the swing is potentially there. What's the big drag here? Liquidity. Big drag here is liquidity. Okay, so the top-down analysis seeming to suggest euro has a bid to it. Let's take a look at cable. Let's take a look at GBP USD. And we'll do a top down there. It will be weekly, daily, and then going through to the hourly. And again, we want to just reference this against the 30-week moving average. Is above that 30-week moving average. The 30-week moving average starting to angle up as well. So some positivity coming through there. Look at that RSI. It's popping above 50. If we hold above 50, okay, then there should be some sort of upwards support. If we go back and we just take a look at this area, so here we're above 50. I mean, a slight dip here, but by and large above 50, you get that upwards trajectory, right? So again, the longer we stay above 50, the more momentum support for the cable pairing. And what we can do is just take a look at this on the daily chart. And you can see that in the daily chart here, it's moved into zone 1. Where's the momentum? It's gone positive as well. Okay, and what would be interesting is, of course, if we close above yesterday's high. So pretty similar to euro US dollar. What's the drag here? Liquidity. Okay, so we'll see a liquidity drag here. Let's just go down to the hourly chart here and do an analysis. And you can see that the timing indicators, the triggers have been pulled. Trigger 1, pull to the upside, got green on top of orange. Trigger 2, stochastic moving to the upside. Take a look where the stochastic is. It's in that upper quintile region. Again, the longer we stay in this upper quintile region, the greater the chance of that swing. See there it stays. I mean, it dips intermittent. It dips in the middle and then moves up, but by and large, there's your swing. Okay, so we're getting all the right signals. It's now whether the momentum maintains. I'm of the opinion, again, today, probably tomorrow, we're going to have thin markets. All right, that's euro. We've taken a look at pound. One we haven't looked at all that often is the Aussie. The Aussie is actually what we call a commodity currency, very closely aligned with a commodity cycle. Also reacts with news that comes out of China. Let's just take a look at how the Aussie is traveling. Let's bring up the Aussie. Okay, so this is an interesting chart as well because there has been pressure, so to speak, on the Aussie. It's been pressure. It looks like it's changing somewhat, and we've got the Aussie moving above the 30-week moving average. The 30-week moving average starting to call up, and of course we're getting the RSI onto that 50 area. So again, a hint of US dollar weakness, isn't it so? So US dollar weakness now starting to, so the commodity currencies, sort of a different category compared to sort of euro, cable, sort of your standard majors. And you can just see that possibly possibly some sort of movement up here, and we'll just watch to see if it's going to push up here. But it's still early. It's not quite as comfortable looking as with the euro and the pound. And if we go through to the daily chart here, what we can see here is it looks as if we are getting that reference candle, or we're getting pretty close to it, right? Here is the lowest low. We're just waiting for today's candle's close to see if it closes above yesterday's high. And by and large, there is a positive momentum in the Aussie as well. Let's go down to the hourly chart here. And what you got here is you've got your triggers pulled, trigger 1, okay, trigger 2. And where's the momentum? It's in the perfect area. Okay, it's showing you that prices are closing towards the high of the range. Well, that happens when there is a certain support, momentum support. Again, when there is a upper quintile position that's sort of maintaining, it's trading in around oscillating around that 80 area. That's where the swing comes. Okay, so we're in the right areas for the majors. It really now depends if we get that US dollar weakness. Our theory has been suggesting US dollar weakness because we've seen real rates coming down. Bond markets closed today, so we're not going to get much direction from the bond plays today. But the idea here is Aussie, Euro, Pound, all catching a bid. Let's take a look at gold, which will also be it's similar to a currency, right? It's XAU/USD. So its ticker is like a currency, 1 troy ounce per US dollar. Let's bring that up. And let's take a look what's happening on the gold side of things. All right, let's go through to the weekly. All right, so what do we have here? We've got the price above that 30-week moving average, that 30-week moving average pointing nicely up. We've also got what looks like a 1, 2, 2, 3. So things looking quite positive for gold. The 2,000 levels a psychological resistance area, and it's at the moment hitting that 2,000, testing it, and just having a tough time breaking above it. So if we just put here 2,000, I'll make it red, make it a little thicker. Okay, what did I do? Must have put 200. Yeah, put 200. Okay, let's just do that again. Okay, so we'll make this 2,000. 2,000. Make it red, a little bit thicker. Okay, so there's the resistance. There's the 2,000 level. It's knocking against that, and it's just having that tough time. So we wanted to get above the 2,000 level. The longer that it can hold above the 2,000, the bigger the platform for the next movement up. But by and large, I think the weakness in the dollar are a factor here, and you can see the RSI nicely above 50. If we go through to the daily chart, yeah, let's clean this up. What's interesting is that the bands are starting to narrow. See, they're narrowing over here just by that 2,000 level. So potentially some sort of explosion in volatility tending towards gold. And we'll have to just, if it stays in that zone 1 and there is an expansion in that volatility, I think we get through that 2,000 level ultimately. You can see that the RSI here nicely above 50 as well. Let's just go down to the hourly for timing purposes. So we've got the two triggers, trigger 1, Trigger 2. Remember, there's that squeeze in volatility, so it's not surprising to see that we've got sort of this flatness here. Effectively, for that 2000 level to fall, we need to get the stochastic into that 80 level and hold. If it rolls over here, it's no good. If it rolls over here, it's no good. That 2000 level is going to be a key resistance level. So we've got to get into the 80 level and hold here. We've got the two triggers now. Let's see if the market cooperates with us. Let's just take a look at one more chart. We'll take a look at the DAX. Again, remember, liquidity are probably going to be affected. We've really got a good breakout here. It's above that 30-week moving average. That 30-week moving average turning up quite sharply. We're above the 50. Now, again, just to point out, if we are holding above 50 on the RSI, there's underlying momentum support. So this is a good technical development, isn't it? So we've got momentum that seems to be expanding. Let's just go down to the daily chart. And I think that the daily chart here just suggesting that there's going to be some sort of pullback. But I think that based on the strong weekly chart, the pullback here potentially sets up a platform for the next move. Just be careful here, really. So the DAX showing some sort of overbought condition. That's actually now starting to manifest in S&P as well. S&P closed today, but I think that at some stage the S&P 500 is going to have to clear its overbought level, just like the DAX is overbought. Nasdaq also. Nasdaq just showing some signs of overbought. So some froth coming into the risk markets. I think some sort of pullback just sets up a nice platform for the next leg up. And that's as far as we go today. Any questions? Please go ahead and type those in. Any questions? Please go ahead and type those in. All right, guys, let's wrap up here. James, have a great day yourself. Everyone, have a good day, and we shall speak tomorrow. Thanks very much, guys. Cheers, Raj. Have a good day. Bye now.